Guys, I know the market is dipping, but right now is not the time to get nervous. Is it time to sell out and buy a little bit back later? Maybe we're going to look at some charts and see what possibly could be the bottom. But the altcoin run is not over. One, because the altcoin ratio isn't going down, but we also have a lot of good news for altcoins. Not only Ethereum, but a lot of other altcoins are getting treasuries. That means more money is going to be flowing into these altcoins than before. Let's actually take a look at what I'm talking about. First of all, Ethereum ETFs have hit 13.7 billions in inflows, and its corporate treasuries are growing. That means corporations are actually becoming more and more interested in Ethereum. And we know that Ethereum is kind of a signal for the rest of the altcoins because A, it's the biggest altcoin, and two, because of its large ERC20 ecosystem, which could have a big effect on the market. So the relative price of Ethereum to Bitcoin is going up, and that pulls the relative price of everything else to Bitcoin up as well. So inflows to Ether funds climbed 44% this month, rising from 9.5 billion on August 1st to 13.7 billion on August 28th. Now remember, August has not been that great for crypto overall because, like we did reach an all-time high in the summer, several all-time highs in the summer actually, but now we've been kind of going down for a couple of weeks. So they're saying after an extended period of underperformance relative to Bitcoin and souring investor sentiment, Ethereum has recently experienced a significant revival in the recognition of both its adoption rate and value proposition. I do think that has to do with the kind of rulings to staking, and where staking is not a security. So that applies for all those other coins as well. Behind investors' appetite is a growing number of companies adopting Ethereum-based corporate treasuries, and that's just as big because that's direct buys of Ethereum into their corporate treasuries. While Bitcoin is the cryptocurrency most associated with treasury companies, other treasuries among corporations are gaining steam. According to Strategic ETH Reserve, companies now hold 4.4 million ETH, or 3.7% of the supply, worth 19.18 billion. That might not sound like much, but that gathering hold over a couple of months is actually quite a lot. The Genius Act provides traditional investors with the comfort to build infrastructure and use cases with this new technology. So that's why they're actually becoming more and more confident in building on Ether. Supported by investors' demand through corporate treasuries and ETFs, Ether's price gained nearly 27% in August to 4,318. Remember, it went to 4,942 before actually coming back down. So it's even down 50, even though it's down 15%, it's still gained 27% despite it actually being down. It was up over 40% essentially at its high. So that's really, really good news for altcoins because as Ethereum goes, a lot of times altcoins actually go. And Ethereum is not the only altcoin that's actually getting these treasuries. We will look at several of them. But right now, industry watchers are optimistic about Ethereum's prospects, but say the coming months will be critical for the network's ecosystem. Ethereum's roadmap is entering critical inflection point. The coming upgrades are set to significantly improve smart contract efficiency and validator usability, advancing Ethereum's competitiveness as an institutional settlement layer, while restaking via EigenLayer and the growth of L2 rollup activity are generating real protocol revenues and attracting developer attention back to the ecosystem. So that's where we are right now. But Ethereum, like I said, is not the only one gaining treasuries. If you look at Dogecoin, it's also getting a treasury, but it's with Elon Musk's lawyer. So Elon Musk's lawyer, Alex Shapiro, is set to chair a planned $200 million Dogecoin treasury. So it's not very big, $200 million, not even a billion, but still not bad for a Dogecoin treasury, backed by the House of Doge as meme coin treasuries vehicles begin to emerge. Now, don't think that your favorite shit meme coin with like a $200,000 like market cap is going to get a treasury. Doge is the biggest meme coin by far, and people see some value proposition with Doge. I don't really see what it is, but they want to create a Doge treasury, which will definitely help Doge. So Elon Musk's attorney, Spiro, is set to chair a new public company that aims to raise $200 million to invest in Dogecoin, according to a Fortune report citing 6 people familiar with the deal. Maybe Mark Cuban will actually inflate the value of this treasury because he likes Doge as well. The initiative is being pitched to investors as a Doge treasury vehicle with the endorsement of the House of Doge, the corporate entity launched in early 2025 by the Dogecoin Foundation. So there is actually like a corporate Doge entity called the House of Doge. I didn't know that, but it's kind of interesting. The company is going to seek to raise $200 million as a public vehicle to hold Dogecoin on its balance sheet, giving investors stock market exposure to the token without direct ownership. So this is like MicroStrategy. They're forming a corporation specifically to hold Dogecoin, and obviously the corporation's worth is going to basically go up and down with Dogecoin. I feel like they should raise this money during the bear market because then you kind of buy near the bottom instead of the top. But that's just another example of basically another coin gaining a treasury, and this will actually float the other coin up at least and have a bottom. So I think Dogecoin's going to be worth significantly more because of this and other treasuries. This year has seen a surge of publicly traded companies rebranding as crypto treasury companies, raising funds to buy and hold digital assets on their balance sheets. While Dogecoin, a meme coin created in 2013, is far less widely adopted than Bitcoin or Ether, it has drawn a few dedicated backers. In February 2025, Vancouver-based Neptune Digital Assets disclosed the acquisition of 1 million Dogecoin via a strategic derivative purchase at an average price of 37 cents per token. Adding to its growing crypto holdings, it also bought 20 Bitcoin, reinforcing its diversified asset strategy. In July, the Nasdaq-listed company BitOrigin announced it secured up to $500 million in debt and equity financing to build its Doge treasury. So there's at least like 3 companies with at least like $200 million treasuries for Doge. But that's not all. Hyperliquid is gaining institutional access with new 21 shares ETP. So both treasuries, ETFs, ETPs, very, very good news for cryptos. So institutional investors now have their first exposure to Hyperliquid's native token through a Europe-listed crypto ETP. 21 Shares, a Switzerland-based asset manager and issuer of crypto exchange-traded products (ETPs), has listed the Hyperliquid ETP on a Swiss exchange. The product gives investors exposure to Hyperliquid token without the need for wallets or on-chain custody. In a Friday announcement, the company described Hyperliquid as one of the major venues for decentralized derivatives, claiming it processes more than 8 billion in daily volume. That's easily believable. I actually thought it was a lot more than that, but I guess I overgauged it. The listings, which marks the first institutional-grade product offer exposure to Hyperliquid protocol, comes just days after Hyperliquid token hit a record high of $50. So obviously, Hyperliquid is actually getting one too. So, that's not really the only ones. Obviously, we all know about Pantera Capital. They raised 1.25 billion. I think they're the second or third one with a 1 billion plus Solana treasury play. And that could definitely be a catalyst for institutional adoption. Now, that's not the reason Solana pumped recently. I think Solana pumped because of Pyth and the connection with the government and Pyth. So Pantera Capital and institutional partners invested 1.25 billion in Solana's treasury, creating a hybrid asset class bridging traditional finance and blockchain innovation. The initiative locks 0.69% of Solana's supply via staking. So it's not even 1% of Solana's staking, but it is still, a good amount of Solana, and they're not the only ones. We have another company wanting $1 billion Solana treasury. And of course, they're doing this because of annualized yield as well. And I do think the coins, like I said, that generate annualized yield will actually be more popular to hold for treasuries than the coins that don't generate annualized yield. So in the evolving landscape of digital assets, institutional investors are increasingly seeking opportunities that blend yield generation, regulatory clarity, and deflationary mechanics. Pantera Capital's recent $1.25 billion investment in Solana's treasury structure, dubbed SolanaCo, epitomizes this shift. By transforming a Solana-listed shell company into a yield-generating vehicle, Pantera and its institutional partners, including Galaxy Digital, Multicoin Capital, and Jump Crypto, are redefining how blockchain assets are managed, governed, and integrated into traditional finance. This move is not merely a capital allocation, but a strategic repositioning of Solana as a hybrid asset class that bridges the gap between institutional rigor and blockchain innovation. So obviously, that's just a few examples. But in the recent months, especially last month and this month, there's been a huge surge in institutional interest in treasuries wanting altcoins, and that's definitely going to help altcoins. But we got to look at some of the Bitcoin charts on TradingView. I am a little bit concerned because if you actually look at the Bitcoin chart on TradingView, the MACD on the daily has obviously gone negative. It's been negative for a while, but that's not actually what I'm actually concerned about. Let's actually switch to Binance here. More concerned about the weekly MACD. You can see the weekly MACDs turn negative, is becoming a little bit more negative. And the last time we went negative here was actually in February, and it lasted all the way until April. And we know for a fact that when we did that February through April, the price of Bitcoin went from 108 to about 75. So there is some clue for that right now. We could be in for a much bigger dip. I definitely think like after a month or so, we'll probably come back up. Let's switch back to the daily. There's another signal that might not look so good right now. You look at the 50 MA, it's starting to curl downwards. And that hasn't happened since February, like the end of February when the tariff were announced either. So if you look at the price right now, when the 50 MA started curving downward, in February, it had already dipped from 108 to 98. Likewise, we've dipped from 124 to about 108. And then after it curved down, we continued to dip for the next like month and a half, and we reached all the way to about 74, 75,000. Now, if this actually parallels this, the overall trend line is still positive because if this parallels this, we will dip down to about $85,000, $86,000. But that is still greater than the low of $74,000 right now. So the overall trend on the bull run would still be negative. And then the next target would actually be $135,000 or so on crypto. And that should happen probably sometime in October. And then hopefully more runs in the ETFs and also cutting rates will push us over 150. So there is basically technical analysis evidence that it could possibly dip to about 85. I still think there's a pretty good chance that we hold at 105, but you can't ignore the pattern that like, yes, the MACD on the weekly has actually dipped negative. And the last time that happened was in February when we actually dipped to 74. And once again, the 50 MA has also dipped or started curling down. And the last time that happened, we also dipped to about 74. So I think 85, 86 is the region that we need to watch. Also 105, because there is a big region of liquidity there. But if we dip below 105, 85, 86 definitely might be in play. And you know, if Bitcoin dips to 85, 86, I do think crypto like altcoins can dip 30% more or so before they come back up. And like if they dip 30% more or so, that is an excellent time to buy some of these alts because I do believe they will go up this winter. Yes, the regulations do look favorable to cryptos and alts in general under Donald Trump. Yes, the economy does not look so great in general. In fact, the stock market actually went down today, and there is a reason for that. It's because the exemptions on the tariffs, we're going to ignore this thing that Trump tariffs have been ruled illegal by the appeal court, but he's gonna appeal that to the Supreme Court, so that really doesn't matter. It's going to take several more months. But there is a tariff exemption that expired today, and that is the de minimis exemption for crypto, and that will hamper the economy. So about 92% of packages delivered to the United States fall under this exemption. And what it is like the de minimis exemption, which allowed shipments valued under $800 to enter the country duty-free, came to an end globally on Friday. So a lot of small businesses depend on this. I mean, yes, a lot of retailers that bought crap on Temu depended on this as well. But more importantly, small businesses that dependent on this to function, their costs are going to suddenly go up, and that will probably trickle down to the consumer market. So consumers are going to actually basically be paying more. So inflation will actually be going up. That might slow down economic activity, although Q2 economic activity did definitely rebound to like year-on-year growth of 3.3%, which is pretty good. It was negative in Q1, positive in Q2, but this de minimis exception is going to hit very, very hard because companies big and small have used exemption to save money on digital fulfillment, and the change could lead to higher prices. So essentially, this is another big spur that could lead to a lot of inflation because remember, like for small businesses, they can actually buy piecemeal under $800 and those get in duty free. So like now they're going to have to pay the duty, which means their prices are actually going to go up. So I think this is part of the reason the S&P, the Dow, and the Nasdaq did not go up today. I think there could be more losses going into next week. And temporarily, it might not be the best time to actually buy right now. But I think like overall, you should definitely DCA out on this dip because I do not think this bull run is over. Even if we dip to 86,000, overall the trend line for this year is definitely positive, and the next target would actually be 135. And plus, with all the Bitcoin treasuries and stuff, not the Bitcoin, but all the altcoin treasuries coming in and the ETFs about to get approved, with companies feeling better and better with the Genius Act, altcoins definitely should be able to pump through the end of this year with rate cut or two coming in. So that's the news for today. Let me know what you think. Like and subscribe, hit that bell notifications button. Thank you and have a nice day.